for the record, start the recording there, so we should be good to go. Welcome, everyone, and I'd like to thank you for joining me for this presentation. I would like to begin with an apology. This was supposed to be a live and in-person presentation in Washington, D.C., and due to a scheduling error that was completely my fault, I had a schedule conflict and was not there, so apologies for that. But this presentation really sprung out of many, many years ago, actually more than a couple decades ago, when I first started doing work for HOSA, which my father-in-law started doing even before that. And I had a conversation with Karen, and she had commented, well, if I ever have to go to prison, are you going to go for me? And I kind of laughed and indicated that I probably wouldn't go to prison, but neither would she, and I would keep her out of prison. And so fast forward till, I guess it was probably about somewhere around 6 or 7 years ago was the first time I gave this presentation, and have updated it with the current rules to really kind of talk about what are the responsibilities of a HOSA professional. And a lot of people, as you come onto the boards, especially at the local level, do have a lot of questions about, well, what do we need to be doing? What are our responsibilities? How does the IRS view a lot of these principles? And so that's going to be the topic that we will be talking about today. So, based on this is just a notice that this is kind of the basic information. This is a required disclosure from the AICPA that this is not specific to any local organization, but it is going to be very much applicable, obviously. But we are retained by HOSA to take care of any kind of general questions and helping you resolve certain things at the local level. So please feel free to call our office at any time, and myself or Jennifer Watson, who's the CPA that handles a lot of those issues, would be happy to either assist you or get you some local counsel that can help you. So the whole intent of this is to really help you become a more effective board member, state advisor, whatever your specific role may be, and what is that role in general for volunteers of nonprofit organizations. And so in working for a lot of nonprofits, in my personal role, we have a number of clients. I've also served on the board at local and national levels for several nonprofits, so a lot of that is where this expertise is based. So we're going to talk about kind of the differences of nonprofits and how they're different from organizations, certainly in the eyes of the IRS. What are the duties of a volunteer that you need to be aware of, whether it's, again, in an advisor or board role? Financial issues, and then some common topics that I frequently see, which are tax ID numbers, banking requirements, and the IRS filing requirements, kind of the practical issues that you face as you kind of start on this journey if you're new to the board process for your local organization. So nonprofits, when they are set up with the IRS, do have to have a specific mission or purpose, and that's generally the servicing or goal of some public good. And they are, getting funding either from the government or from the general public, so it can be in both, but they enjoy tax-exempt status under IRS Section 501. And so there are actually a number of different non-taxable entities, but specifically HOSA is a 501c3 charity, which is the most common and what is referred to the most. But they do carry that kind of obligation to use those financial resources to accomplish that mission and be put to that purpose of serving the greater good. So HOSA is a 501c3 organization, and it was actually incorporated in the state of Delaware back in 1979, so this is just a sample. A lot of this documentation we do have in our files and offices going back to the inception. So occasionally we do have state organizations that, whether it's for banking purposes or maybe with their university or educational institution, they want to see kind of the proof of the documentation that it's a legitimate organization, that it has an ID number. So all of those items we can certainly share at any point in time, and I'll be kind of referencing a few more of those as we go through. So here you can see from the Certificate of Incorporation, it said that HOSA was started for the purpose of charitable, religious, educational, and scientific purposes. So basically, when it was set up, it had very broad powers to really serve any number of different purposes, which, you know, I often get the question, well, can we do this or can we do that? Is that something that would be allowable? And so the general rule is there are pretty broad criteria under all of the bylaws that are structured. So the philosophical mission that spurs any entity carries an obligation of being a good steward of those financial resources. And so that's the first step when you kind of consider what are you doing with the money, whether it be from membership fees or other sources that you're maintaining. And you need to keep a duty that is something with consistent with that. So fundraising for your entity, awarding scholarships. Those are all certainly very identifiable purposes, and I get a lot of questions of that over the years. Can we do a bake sale? Can we do a car wash? Can we do any number? Can we sell T-shirts? Can we sell publications? Can we do things? All of those things, generally speaking, fall under, you know, that consistent mission. But starting your own local business is not okay, and so you want to avoid unrelated business taxable income, or UBTI. And unrelated business taxable income is, just as the name would imply, is a business income that is unrelated to the charitable organization. And so it has to meet three criteria to be considered unrelated business taxable income. Number one, it has to be a trade or business, something that is you know, identifiable, whether it's maybe retail or something else, and it has to be regularly carried on. So, you know, any kind of sale or proceeds, whether it be a bake sale or any kind of yard sale or something kind of one-time event, or something that you do with selling T-shirts, you know, it has to be something you're regular carrying on every day on an ongoing basis. And it can't be substantially, if it's not substantially related to furthering the exempt purpose of the organization. So there are a number of modifications, exclusions, and exemptions to that, but for the most part, it's hard to imagine many things within the context of HOSA that would ever be considered unrelated business taxable income, but it is certainly something to be aware of. Now, some of those exemptions are if you use any volunteer labor. So, you know, if you use volunteers to staff your fundraising activity, bake sales as an example, certainly that meets that exclusion. Or if it's for the convenience of its members. So, you know, the example I use here is you're selling publications or journals related to it. So if there were, you know, something that you're selling, you know, and you were doing that on an ongoing basis, that's still okay because that's really kind of related to your mission. If it's publications and journals or other things that would be related to the overall mission of HOSA. Or if you're selling donated merchandise. So many people in most areas, I assume, have some form of goodwill or charity shop where donated items are sold to the general public. Those kind of thrift shop operations would generally meet that exemption as well. So those are kind of the criteria. I cover this topic, again, not because there's really a great concern that a lot of, or really any organizations with HOSA might have UBTI, but because it is a common question that I get. Well, is it okay for us to do this or that to raise money? And in most cases it is. But as always, if you ever have any questions, certainly please feel free to give us a call at our firm. So the next thing I'm going to cover is what are the keys to financial stability? And this really kind of falls under the category that a lot of people who have worked as volunteers with HOSA over the years really do talk about, what are my responsibilities? What am I supposed to be aware of? What am I supposed to be doing? And like any organization, you just want to keep good records. You need to have capable, dedicated personnel and management. You want to have good accounting and control measures. And you need to have reasonable constraints on the activities. That generally involves having a capable board of directors, having organized meetings, and keeping notes and minutes of those meetings as well. In some cases, you would have maybe not an audit committee, but a non-staff person. What this may be the treasurer in most cases of the board, who's kind of directed to have the oversight for all of those finances. An audit is not necessary in any form or fashion for not in terms of any IRS requirements. So that's nothing you need to have accomplished. But you do get into kind of the board's responsibility. And one of the things we will get to is that there is supposed to be a financial management responsibility. Now, that financial management includes proper planning, budgeting, making sure you have proper accounting records, payroll taxes if you do have payroll, which would be quite rare within HOSA, and that you're meeting the annual government filings, which we will get into each year. Now, National HOSA files a consolidated Form 990 each year. And so I'll get into the filing requirements a little bit later in this presentation, but to address it right now, basically we include every membership dues in that consolidated return. And those that participate in it, that meets their filing capabilities for that year. To kind of finish up this concept of the duties of a volunteer, you have to take care. You have to be loyal to the organization, as I already mentioned. You have to manage accounts and have a financial literacy. Duty of care is basically what is in many cases called the prudent man rule or prudent person rule, which would be that's the decisions that an ordinary person would exercise in similar circumstances. And, you know, a prudent person would attend their meetings. They would show independent judgment. They wouldn't be biased and say, well, let's have my brother-in-law do the accounting or the books for this organization. Now, that wouldn't inherently be bad, but, you know, any kind of self-dealing should be avoided. And just being generally informed about the organization, and delegating responsibility to responsible individuals, meaning that, you know, you would handle, you know, if you do have the proceeds from any kind of fundraising event, that you maybe have a board member make that deposit and not give it to potentially one of the students to take care of. So those are the kind of scenarios that you would look at for a duty of care. Loyalty is giving undivided allegiance to the organization. So you never want to have a conflict where you were serving one board and then you were on the board or had some business that was in any form of conflict with it. And you also want to avoid any kind of personal or family interests. Those should never be put before the organization's interests, obviously. And you want to avoid any conflicts of interest in fact and in appearance. And so that gets to the point of, well, this may not be a conflict of interest, but it doesn't look good in this scenario, so probably shouldn't do that either. So you just need to kind of always be aware of that as you're managing those affairs. The duty to manage accounts, as by definition of the IRS and other entities, is to ensure that there is a financial accountability by making sure that your resources are used prudently, that you have procedures in place to ensure accurate records, and that no one person has complete and absolute sole control over the finance. So that's a very applicable topic. And so at most levels, if you do have a bank account, it's always a good practice to make sure that you have at least 2 or maybe 3 people who have signature authority on that account and can check the balances and ensure that there's no conflicts there, that funds are not being directed in the proper manner. And I have seen that over the years, sometimes within HOSA, not with any kind of dark intent, but really just an issue where someone had been doing it quite a long time. They always took care of it, and it just became easier to do that. So you kind of have to sometimes be aware to just not allow things to happen just because that's the way we've always done it, basically. And then there's finally the duty of financial literacy, and so that's always a question that I get sometimes. And so basically the IRS considers you to be financially literate if you understand the financial statements, understand what the financial risks are of making any decision, and the impact of the decision on your financial statements, being able to identify that. And so it doesn't mean that you or anyone on the board has to feel comfortable evaluating any of that. It also includes that being financially literate or having that duty of financial literacy also means you may say, I really don't understand all of this stuff, so we probably better get a bookkeeper or an accountant or someone who can assist us with this because it's not, my strongest suit. And that really shows that you were prudent in managing the affairs of the organization as well. And so some of the questions you should always just be thinking about is, do we have enough cash in the bank account to cover our expenses? When we spend expenses and maybe do an event, are those expenses reasonable? A good measure I always like to use is, would I personally spend that on, a dinner, on travel, on whatever? Is that something that I would do? Are the expenses meeting our budget for what we kind of outlined? And are the expenditures appropriate? And that's, again, just kind of the optics of anything of, where are you spending the money? Where are you, having the meetings, and is that an appropriate use? And are you insured against appropriate risk? So some organizations have board insurance that they can get. Certainly, probably the most common instance of insurance would relate to any events that you may hold. If you hold that in an outside venue, many times they're going to require you to have some form of property and casualty insurance so that, if there was an accident or anything did occur, that you were insured against that. And so that's something to be mindful of as well. So a lot of these questions of financial questions really go beyond even just your, bank account and the checking account. It's really about just overall financial ability and, prudent guidance. So that's an ongoing question. Are we meeting the guidelines and the requirements set for the IRS for nonprofits as well? And that's really what our role and for our organization is through our CPA division, which is Karsten Folks and Karsten Advisors in general, is to ensure, and we do that not only with the annual filings, but doing presentations like this to make sure that we're educating everyone in the organization, to being available for questions, and also on some surveys and other things that we do throughout the year as well. So financial abnormalities. So if you're noticing that you are consistently late with financial statements and bookkeeping, that's something to be aware of. So if you're ever on a board and whoever is assigned to do that, your treasurer or maybe an outside bookkeeper, if they're constantly behind, if you're here for your November board meeting and they say, well, I haven't been able to finish the financial statements for certainly July or even August, you may think, that's been quite a while. Generally speaking, in most organizations, you should be able to generate financial statements within 30 days. So if you're having a November board meeting, it would be realistic to certainly have them, if it was this time of the month, it'd be reasonable to expect that maybe October was done, but if not October, certainly September. So it should never be more than about 60 days later if you're having a meeting to say, where are the financial statements, or can we take a look at that? And just, any awareness of, well, do you have the bank statements? Do you know where the bank statements are? If you ever get questions for that person who's responsible that says, no, I don't know where they are or what they are, that's something to be aware of. So. Also, I think there's someone on the line that maybe is having some background noise. If you could mute your line, that would be really helpful for the presentation. Thank you. If you ever get any notices for any late taxes or late filings, that's certainly something to make sure you're very much aware of. And you want to be aware of, okay, did we have late payment penalties or any large bank charges for fees or canceled checks or other things? That's something to be aware of as well. Also, should be aware of, if it ever comes up, oh, well, our bank account is overdrawn, or, it's in a situation like that where, checks are cut, but, maybe they're never mailed. And that's the kind of things that board members may sometimes pick up on by, especially in the community, if you have vendors or other people that comment, well, we haven't gotten paid yet from, that event where we provided, the food or whatever it is. So you should always kind of be, aware of that. And other warning signs are, any kind of reluctance to make a change in the system. Now, again, that's not always a sign. Each one of these things, of course, is not a sign in and of itself, but these are all things to look for. If things are consistently late, if there's a reluctance there to share information or to make any changes in your procedures, or as the last point here shows, they have multiple bank accounts, that's always an indicator as well. Well, that's actually not on this report because that's on a different bank account where we keep those funds. That's always something to be aware of as well. So a lot of these things, for many people, are a lot of common sense, but it's always just important to keep them at the top of mind. So now we'll kind of get into the more practical questions that I get sometimes of. These are the common questions I've probably gotten over the years and all the years that we've worked with HOSA, which is, what is our tax ID number? How do we avoid paying the sales tax or the hotel tax for this event? How do we open a bank account? Do we need to request nonprofit status? And do we need to file a tax return? So we'll address each one of those right now. So on the question of tax ID numbers, so there are two types of tax ID numbers. There is a sales tax exemption and a federal employer identification number. Now, HOSA does have a group exemption number from the IRS, meaning that any affiliate organization, if they are included on the consolidated return that we file, and follow the bylaws of the organization, is by itself considered a nonprofit organization. And so you already have that 501c3 status. You don't need to get it yourself. But you should get your own federal employer ID number. You should not use National HOSA's ID. You should have your own separate employer identification number. And that is your employer identification number for any kind of filing with the IRS. You obtain it by filing Form SS4 with the IRS, but that is very much different from your sales tax exemption number. And so a lot of times when entities are trying to purchase items or maybe avoid paying hotel tax, what they're asking for in a lot of those cases is not the employer ID number, but it may be the sales tax exemption number, which you would get from your specific state, typically from the Treasury or the Comptroller or the Department of Finance within your specific state. Again, those are things where we can kind of point you in the direction if you ever have any questions. And I've listed our 800 number there. It's a toll-free number, 1-800-340-6743, and ask for Jennifer Watson. Jennifer is the CPA that is currently handling all of the work for National HOSA. So this I just mentioned, the sales tax, hotel tax. You need to get a sales tax exemption number from your specific state, which would be in most cases the Department of Revenue. It's called different things in different states, maybe the Comptroller or the state controller's office, and usually there's some required forms that you need to fill out. But if the question ever arises, are you exempt from federal tax? Are you an approved for nonprofit status? The answer is always yes, because you can rely on that group exemption from the IRS. To the question of how to open a bank account, you will need your own federal ID number, and so that's what I mentioned earlier. You obtain that by filling out a Form SS4, which can be done online. If you just Google IRS SS4, that should take you to the IRS website that would have you provide that. But that's probably one of the first questions you should ask if you're just now taking over the financial responsibilities for your local chapter is, what is our federal ID number? Other things that a bank will likely want, so if you're doing it for the first time, or if you just decide it's time for you to change your banking relationship, you may think about, well, what else is the bank going to need? They're going to need that SS4, that ID number. They're also going to want a resolution by your local board of directors, who is a person, whether it be the treasurer, the president, both of them, whoever it is, to actually open that account. Many times they'll want to see your bylaws of your local organization or your charter or articles of incorporation. Now, we've had some instances for some of the smaller affiliates where they didn't have that. And you don't have to have that. We can provide you, while you don't want to use National HOSA's tax ID number, we can give you the bylaws and the articles of incorporation for National HOSA as well. Which kind of leads us to that question, do we need to request nonprofit status? So HOSA has received a determination letter from the IRS that recognizes HOSA and any affiliate as exempt under 501c3. So any of the state local affiliates can rely upon that ruling and be very confident to represent to anyone in the public that your organization is a 501c3 charity, and that donations are tax deductible, and that you're eligible for all of the benefits, whether it be not paying sales tax or anything else that you're trying to accomplish. So this is a copy of a letter back in 2004. I first started working with HOSA personally in 2000. That was the year my father-in-law retired. And I'd been doing the work for a few years, and the question came up, well, do we have something from the IRS that says we're a 501c3 organization? I mean, we've always kind of assumed that, but do we have something? So I looked in the file, and I didn't find anything. And so I sent a letter to the IRS. It's been some time ago now, as you can tell from the date, and requested confirmation of that. And to my surprise, they actually did reply. And they, as you can see there, did respond that this letter is the determination that it is eligible as a 501c3 under the Internal Revenue Code. And so the group exemption number for HOSA is 3182. And so that is, if it ever were to come up with any kind of taxing authority, that's the group exemption number that should be used. So then, the common questions: do we need to file a tax return? So as I mentioned earlier, all of the membership fees and dues are reported on a consolidated return for National HOSA. So if you're providing all that information to HOSA, the national organization is collecting the dues and taking care of that for you, there is no further requirement if that is all of the revenue that you have. That meets your filing responsibility. So it's not necessary for you to file that additional report. And we include each state affiliate's information on this filing, and it meets that filing requirement for all membership revenue. However, this is where it does start to change a little bit. Now, the rule used to be $25,000. It's since been increased to $50,000, and then there's a number of other exceptions that would allow you to fit under it. But in general, the new standard today is that if you do have other revenue that you're generating outside of your state affiliation, you should be filing the Form 990N, and this is an online filing with the IRS that's many times called the postcard return. And so it's very, very streamlined. It's even simpler than the 990EZ to fill out, and is something that can be just submitted to the IRS on an annual basis. Now, again, if you have other questions on this, do you need to file it? How do we file it? That's certainly something that we can assist you with at the at our offices, and would be happy to use that. I will just pull over here the IRS site that addresses that, and it kind of goes through, you know, those procedures. As I mentioned, that I've been doing this long enough to remember when they called it the postcard, they now call it the e-postcard. So it used to be you sent in an actual postcard-sized filing. Now it's just an e-postcard. And so this kind of has very straightforward instructions to walk you through that entire process. The IRS does have a number for technical issues, and if you have any issues in terms of that filing, just on what do you need to file, how do you do it, certainly you can direct them to our organization as well. So based on that, that kind of covers everything that I wanted to talk about today, and appreciate everyone logging in. I'm happy to answer questions, but Bobby, I'm not sure if we have that capability to set that up.
We do. They can either verbalize questions through their audio, or they can send in questions through chat.
Okay. All right. Very good.
This is Joanne Clovis from Idaho. Are we going to be able to get a copy of your PowerPoint?
Yes, I will forward a copy of this to Bobby, or you can email me directly, and my email address is tom, T-O-M, at Karsten, K-A-R-S-T-E-N, advisors, A-D-V as in Victor, I-S-O-R-S, .com. So Tom at KarstenAdvisors.com. Oh, yeah. And I believe Bobby, you have recorded this.
It's really exciting.
Yeah.
Yes, this is being recorded, so we're going to upload it to YouTube and send everybody the link so that you can watch it later.
Okay, great. Great. Okay.
Thank you.
Any other questions?
Can you hear me?
Yes.
Okay. This is Charlene in Louisiana. All right. Tell me again what the group exemption number is.
Sure. So the group exemption number is basically what identifies you if the IRS were to ever question you and say, well, so you've got 501c3 status, why do you have 501c3? So if you ever received contact from the IRS, well, you know, how do you know you've got 501c3 status, 501c3 status? That's what would identify you as an affiliate of National HOSA. So that's the unique number associated with HOSA that identifies you as being part of their filing group, and so that is what is associated with it.
So as being, we're operating through an AHEC, so that kind of changes everything, doesn't it? Because our AHEC takes care of everything.
That's correct. So in a lot of that, you know, depending on the structure of the local organization, there are some of the affiliates that have gotten their own 501c3 status, and so they do their own filing. There are some that go through, you know, a state or public entity that's kind of doing all of their oversight as well, and so that changes kind of the dynamics associated with it. Generally speaking, the group exemption number is only going to be used in the context of the IRS. It's really not something you would use for vendors or anyone else to provide that to them. It would not be meaningful in most cases.
Okay.
Tom, we've had a couple questions come in looking for advice on getting hotel tax exempt status.
Mm-hmm.
If you could speak towards that.
Sure. So as I mentioned in the previous slides, at the end of the day, it's really going to depend on what are the policies of that, in some cases, not only state, but the local municipality or hotel district. Hotel taxes are definitely a very localized issue, and so you're going to need to meet those requirements, but also what are the policies of each of the hotel chains. For example, in most states, it's the responsibility of that retailer or that hotel to collect either sales tax or hotel tax. So they are the ones ultimately that get audited, and if they ever do, then they've got to be able to show, well, we didn't charge them taxes, and here's why. And so some of them have a form you need to fill out. Some of them will want some kind of proof that you are a 501c3 organization. So this letter that I have that's up there right now is kind of, we've sent to a number of affiliates so that they could use that to kind of validate their 501c3 status. So basically it's going to come down to that in most cases of what they're going to accept, and probably the highest standard has been this letter that we've used over the years to kind of validate that nonprofit status. So
you're saying that was that in reference to not paying sales tax at hotels? Was that the question?
That was the original question, yes. How do you avoid or reduce the or not pay the hotel tax at the state level?
So just using that letter allows that?
No, using that letter would validate your 501c3 status. It's going to validate you as a tax-exempt entity. Unfortunately, hotel tax is not my area of expertise, and it is a very localized issue. So in some states and areas, it's conceivable even if you are a nonprofit, they still are going to charge you the hotel tax associated with it. It would really depend on what the law and rule is in each location. If they do allow it, then that letter is going to be the first thing in validating your nonprofit status. And Bobby, I may need some assistance. I saw that there were some other questions on the chat, but they kind of pop up for me and then they go away, so I'm not sure exactly where I access those. Or maybe you can just tell me what they are and I can respond to them for the questions.
I think you've covered everything. I did just get one chat. Somebody asked, can state organizations use Tom's services to get their state paperwork completed?
Sure. So we can kind of get you in the general direction. We, in most cases, would encourage you to use a local CPA because the state filings do vary from state to state. And so while we do have offices in Texas and Colorado and are pretty knowledgeable there, it's going to be your best case to get someone local to handle that for you. But we're more than happy to answer any general questions that you have. If you're filling out the paperwork yourselves and need a little bit of assistance there, we're more than happy to do that as well. If it starts to get into something a little bit more intensive or more specialized, that's something you're probably going to need to get a local firm to assist you with.
And it looks to me like you've covered everything that individuals asked through the chat system. Did anybody else have a last question that they would like answered?
Okay, well, thank you very much. Bobby, thank you for facilitating this, and thank you everyone for joining. If you have any questions, please feel free to give us a call at our offices, and have a great day.
Thank you.
All right, thanks.